Madhu, and this is a question for me, right? As a GP, one of the core jobs is to eventually create liquidity for your LPs, right? And of course, every VC knows how to source deals, pick deals, help the founders, give them customer intros, do whatever we can do to support them. But on the side of exits, and this is personally for me as well, right? I don't know what to do on a regular basis in terms of how do I help the portfolio, the founders, how do I support them in terms of eventually driving that goal. Because I remember back in the day when I was with a large VC firm, the managing partner used to say that the exits don't happen by themselves. And then by the end of fund life, like I remember year 8 to 10, he would literally in every Monday meeting be asking each of us, what are you doing? What have you done this week, the last week, in terms of working with your portfolio to drive exits, right? And it's a very genuine question. It's not a very obvious answer. So any thoughts there on that?
Yeah, actually, I'm glad that you asked that question, Sumitra, not because I think you could use any of my advice. I'm sure you're doing a lot of things and I'm happy to share my 2 cents, but it's a very valuable question for the investors in your audience, which I know there are many, right? So first thing I'll say is certainly the way I look at it, and Hanz and I look at it as our roles as angel investors and kind of budding LPs ourselves, is it is valuable to think of your portfolio or any investor's portfolio. It's a portfolio of portfolios. And what I mean by that is if you have, and you particularly, I know Operator Studio takes a sort of focused, concentrated portfolio approach. So as you know, as we all know, there are funds that do a couple of hundred investments and they've got like checks and everything. And that's a style, and that's a different thing that you think about, you have to work on. But a portfolio of portfolios is looking at every company as a combination of assets. There's value in looking at it holistically from a perspective of this is a company that's doing this particular job in this particular industry. But when it comes to liquidity, when it comes to evaluating opportunities for the company to find a home or graduate, so to speak, it's a collection of portfolios that you have, right? A company has IP, people, market presence, compliance benefits, whatever. So how can you look at your every 7 or 10 or 12 companies that you have and methodically sort of intellectually dissect and register what this company is? And it'll help you when you're having conversations with secondary players, when you're having conversations with PE firms, that you are not just looking at the fact that you have 7 companies or 10 companies, you're looking at the fact that you have 47 assets, or you have strong IP representation in your portfolio in the ML ops space. You have a really good portfolio in the India-US corridor, obviously, and you have a really good representation in consumer packaged goods. So if you look at it that way, you don't just have 10 companies, you have 46 entities to try and use when it comes to liquidity brainstorming. And I don't think companies tend to think like, or investors tend to think like that, right? You put money in and hope for an exit, days are gone, long gone. So one suggestion is to look at every company methodically. The other is much lower hanging, and then, whether you use ChatGPT or ML modeling to do this, there's lots of ways to look at a company, your portfolio as a collection of portfolios or collection of assets. The other low hanging fruit that I think many investors don't do a good job at, and I speak to this as both an investor and a founder, is frequent, consistent, meaningful conversations with your portfolio companies, right? Like understanding what their business is, what's working, what's not working. If an investor is able to cross I should look good in front of my investor because I don't want to show them my downside. If you could cross that and inspire a sense of trust, then you'll get so much more insight into how you can be helpful to that company, and in turn identify when it's time to look for liquidity, what you can do for them. And I can say from and Hanz and I both know some of these people, and certainly I can think of many that were lip service investors, and it's unfortunate. They're well-meaning investors, but their motivations didn't allow them to truly be of value to their portfolio company. It's really unfortunate, right? Because their assets right in front of them that they could have helped, that they just ended up not being in the right position to do so. So really thinking about your company as a collection of assets, and then building a direct trustworthy relationship with the founder or the operating team. It doesn't have to be the founder. It could be the CTO that you're building a relationship with, right? Even though the founder took money from you, you're actually building a relationship with the head of customer success. Great, no problem. You have a path into the company to knowing what's happening and being valuable to them.
Yeah. And any quick thoughts? This came into my mind again. I think very relevant for all the GPs and particularly emerging managers out there. There's this whole rise of secondary funds, right? You can sell slices of portfolios, or you can kind of bucket portfolio companies together and sell them as kind of a bucket. And
Yes, yes,
we are seeing
yes.
very very interesting kind of models in the market today. Any views on that?
Yeah, absolutely. I'm glad you brought that up. We didn't touch on the buy side. We
Yeah.
only talked about how do you optimize your sell side. On the buy side, in fact, Hans and I are actively involved in helping at least one venture fund identify buyers for a package of their positions. And so lots of options there, but just to keep it sort of relatively brief, uh, family offices are starting to seek positions in GP positions. So they don't want to own the company directly. They want to just be a part of the GP's position so that they have a passive ownership in vetted opportunities. So, and generally speaking, private markets are seeing a huge expansion in focus, money, technology, et cetera. So family offices are a really good source, single family office, multifamily offices, et cetera. And then boutique secondary firms that are starting up are another opportunity, right? Many of them are starting to look at venture portfolios given the value being more attractive than it was 5 years ago. So actively seeking out those folks in addition to family offices. This is where also a GP connecting with a good banker is going to be really valuable, right? I was talking to somebody at Morgan Stanley, and they have a huge private wealth practice where if the company is at a certain portfolio size, then they absolutely directly can email blast 250 HNIs, high net worth individuals, to see if they'd be interested in a position. So relationship building on the buy side is critical, whether it's a family office, high net worth investor, fund of funds is another path. And increasingly, many of them aren't aware of some of these portfolio companies or aren't aware of emerging manager, emerging funds, but they would love to consider it once they get a sense of the financials. So it's a matter of you making yourself known as an investor that would pay off, because the focus on sort of smaller sub $100 million funds and what they have to offer is relatively new. And so there's a lot of opportunity for brand building that isn't very aware, that many investors aren't very aware of, because you usually write it off as I'm not big enough. But no, actually, there's a huge set of opportunities. So some of the players I just mentioned, worth considering. Hans and I are in conversation with a group of family offices that is looking to expand their presence in the US. That's a good example, right? We're also talking to some brick and mortar family offices that are want to dip their toes into tech. So tons of opportunities out there for secondaries, especially because many of them are now thinking now is a great time to go shopping.
Things are changing, and they are. I mean, family offices tend to go into, real estate and stock market, but they're slowly, the younger generation within these family offices are looking at tech investments and